Hello, everyone. My name is Soham. I lead our institutional business at Reserve Protocol. A little bit of background on myself. I started my career at Citi in sales and trading, where I covered equities mostly. So I did some equity research as well as covered equity derivatives. And really, that's kind of where I got my love for DeFi and crypto because I saw kind of the inefficiencies happening in trade settlement and things like that, and that whole process with middle and back office. And that's really what inspired me to kind of pursue crypto. So that's kind of how I ended up at Reserve. Been here for about 3 years where I built out our institutional business. And yeah, super excited to be here. So thank you all. Going to tell you a little bit about Reserve and what we do, as well as our partnership with Black Manta. Cool. So getting into it, Reserve is a platform to create index products built on crypto rails. So we call these index products DTFs. That stands for Decentralized Token Folios. They are meant to mimic ETFs, but built on crypto rails. And I'll get into kind of the various benefits and stuff that we see in terms of doing that here in a little bit. The project itself was started in 2019. Our backers include Coinbase Ventures, Peter Thiel and Sam Altman were seed investors in the seed round for our company. If you guys are familiar with those guys, I don't know. But we're up to about 350 million in total deposits in the platform right now, mostly coming from institutional investors. So crypto hedge funds, asset managers, and family offices make up about 90% of our total deposits. We're also proud to partner with a number of the leading index providers in the space. So Bloomberg, CoinDesk Indices, as well as Market Vector. Market Vector is a subsidiary of VanEck, who you guys are all probably familiar with in the ETF space. All three of those companies have actually partnered with us to create spot versions of their index products on our platform. So really excited, kind of over the last couple of years, seeing the ecosystem grow and, a lot more to announce in the coming weeks and months. So definitely stay tuned for that. In terms of now getting into why we've actually decided and why we feel like this really is the future of building ETF-like products on crypto rails. And it really comes down to a few things, right? Number one, the real-time transparent proof of reserves. So on our platform, there's no need for any auditors or any, a lot of ETFs do weekly, daily, or monthly audits, like it kind of ranges based on the ETF. For our platform, because it's built on these blockchain rails, anybody can actually go and verify that the ETF reserves are there, and the asset is backed one-to-one at all times, and you can check the NAV at any time. Anybody is free to do that. So no auditors or anything needed. Just simply check on the blockchain. The second is automated fee distribution. So a lot kind of goes into fee distribution for traditional ETFs and ETPs and things like that. For us, because it's built on those crypto rails, all of that process in terms of the fee distribution and everything is all automated, and you simply hold the assets, and if there's any yield that accrues or anything like that, you realize that yield every second if it's accruing, right? And number three is the liquidity aspect. And I think this is really one of the most important pieces. You have 24/7 minting and redeeming ability on our platform for NAV at all times. So that enables any investor to come and basically get out of a position if they want to at any time of the day, any day of the week, any time of the year, right? So very different from kind of like your traditional ETF structures that only trade during market hours and things like that. And then of course 4 and 5 up here is really what you guys are all familiar with in the ETF space in general, right? The benefit of diversification of your investment, as well as professionally managed kind of baskets and tokens like that. Here's just kind of like, I think, a more visual way to kind of show what I just kind of said. And what you'll notice is it really, you can kind of see the colors here. But this right patch is kind of a section that's all green on the DTF space when compared to ETFs and mutual funds, right? So really leaning into that benefit of the 24/7 liquidity, as well as the on-chain proof of reserves at all times. And this, just more in terms of like our general thesis at Reserve. If you look at the U.S. ETF market today, about 26% of all equities are held in index products, actually. And when ETFs and stuff first came around in 70s, 80s, and stuff like that, that number was nowhere near that. And now, of course, it's grown into a multi-trillion-dollar business. Right now, less than 5 basis points of the total crypto market cap is actually held in index products. And so we really see that as a huge addressable market and an area that's going to grow over the coming years and decades. So let's talk a little bit about the products themselves, and this is where our partnership with Black Manta will come in. We have both yield index products and token index products, and the ones that we've worked with Black Manta on are the yield index products. So ETH Plus. ETH Plus is basically geared towards investors that are maybe looking at the Ethereum ETFs or ETPs. Ethereum Plus, ETH Plus, is basically a diversified basket of the leading staking providers in DeFi today. So what you do is you basically just hold this asset and you get diversified exposure to the 4 leading staking providers. You hold that asset and you simply passively earn the staking yield. As I mentioned, it's accruing every second, right? This asset is the largest asset in DeFi today. It has 230 million in total deposits, again, mostly coming from institutional investors, like I talked about before. When compared to the ETFs, with the ETFs, you don't get the yield from staking. And so we really see this as the main differentiating factor when it comes to comparing this product to the Ethereum ETFs today. When you compare this asset to the Ethereum ETPs, there's other benefits. So namely the liquidity aspect, right? ETPs have a longer redemption time. Here, we take advantage of kind of the blockchain rails that I was mentioning before, where you actually have daily liquidity for this product. So if you wanted to get out of it or sell out of it or get into it, you have the free reign to kind of do that. Also on the fee side, the fees for the product that I'll get into with Black Manta that we've partnered on are materially less on this product than they are for ETPs. So fees on ETPs usually range around maybe the 2% mark. Here we're charging only 65 basis points on the fee, so about a third of the fees you can expect on that. So that's ETH Plus. And then USD3 is really a diversified money market index for DeFi. So DeFi has these leading money markets. Total within these 4 leading money markets, Aave, Compound, Maker, and Morpho, is about 30 billion in total deposits that are on these platforms right now. So by far and away the leading money markets in crypto. And you basically hold this asset and you get equal exposure to all 4 of those markets. This is a stablecoin based product. So this is for folks that are looking to deploy stablecoins. You can expect over the last year it's returned about 6 to 8%. It's a variable yield, so it depends on kind of market conditions and things like that. When the market is doing really, really well, like it was maybe like late last year, these yields are far and away into the double digits, potentially even like 20+% for short periods of time. And then of course, as the market kind of cools off a little bit, the yields come down. So that's kind of both of those products, and both of those products are what we've started the partnership with our friends at Black Manta with. And so what we've done is we basically created a fully regulatory compliant wrapper around these products, enabling institutional access to them. The feedback that we kind of received from institutions that we talked to was that a lot of people found these products really interesting, but not everyone has the regulatory and compliant ability to access these products in DeFi today. That's why we've built kind of this first of its kind product set that really addresses that concern and that need in the market. And so it's fully MiFID II regulatory compliant. If you guys are curious about actually investing into the vehicle or the specifics around the regulatory setup, did definitely encourage you guys to speak with the Black Manta team about that. But it's something that we're super excited about, and very excited to chat with you guys later over a drink or over some food about what you guys think of these products that we've built. And then we get into the token index products. So the two that I just went through were the yield-based products. And we also have token products. So these are the ones that we've partnered with the likes of Bloomberg, Bloomberg Galaxy Crypto Index. That is an official index that Bloomberg publishes, rebalanced monthly based on a specific methodology that Bloomberg and Galaxy Digital have come up with together. And we've worked with them to basically bring a spot version of that product to market on our platform. Right? So this is a fully investable product that anybody can go and purchase today, either on our platform or if listed on. Yeah. So it's actively managed in that there is a specific methodology that Bloomberg and Galaxy have come up with together that they basically run their models on and publish on a monthly basis. The curator, which is basically the asset manager in charge of doing the on-chain operations to match the basket weightings to what they publish, that portion is managed by an actual risk manager. In this case, it's RE7 Labs. They're one of the leading asset managers in the DeFi space today. I believe they manage over 500 million, approaching $1 billion in total assets in DeFi today. We're also partnered with two of the other leading asset managers who both kind of cumulatively manage over 2 billion in assets in DeFi today. So we work with kind of the best of the best asset managers in DeFi to help manage kind of these products. Does that make sense? Awesome. Great. And then this product is really kind of showcasing, I think, some of the more flexibility that we have in our product. So you don't necessarily have to choose between doing a token basket or a yield basket. You can kind of mix the two. And that's kind of what this product is. Stakehouse Financial, another professional DeFi asset manager. This particular index aims to have an equal weighting of Bitcoin and Ethereum, and then have a yield-bearing position that actually uses that yield to dollar cost average into both of those blue chip assets over time on a monthly basis. So a little bit more in the DeFi weeds on this side. I don't know if anyone is super curious about this particular product, but mainly just showcasing what's possible with the platform. Amazing. And so that kind of will do it for me today. As mentioned, just an overview of our team. If anybody is curious to get in contact with folks on our team, happy to do that. Of course, we're very proud of our investors as well. We've got Coinbase Ventures as well as Sam Altman, Peter Thiel, and some other great folks on here. And just a little bit more background about our team and the folks involved in the project. So that'll do it for me today. Again, thank you guys so much for having me. Very excited to meet all of you later tonight. And thank you again. I did forget one thing here. If you guys do want to learn more about the products here, I encourage you guys to scan the QR codes above. That will actually take you to the Black Manta landing pages for both of the products, where you can learn more and get more involved there. So again, thank you. Thank you.